Okay, good morning and hello everyone. Today is Wednesday, September 16th, and I'm Michael Boudreaux, currency strategist. We are here for the release of U.S. inflation data in just under a minute. CPI is supposed to come in, guys, at negative 0.1%. We are expecting a drawdown for the month of August. More importantly, the core reads 0.2, and the core year on year 1.9 is expected to see a little bit of an uptick. So remember, this is just one day ahead of the all-important, highly anticipated FOMC policy decision, which comes out tomorrow. Obviously, we'll go over the implications of that. But it's good to see everyone here in the room. Cameron, good morning. Dale, how's it going? Mario, I got your email overnight. Definitely want to address that here today once we get through this. So we'll take a moment and do that. Mark, Graham, great to see you guys. So about 15 seconds out, again, the dollar index at support, looking at 11,984, 11,983. We highlighted this on yesterday's Squawk feed. And we will see prints at 1.8, so it's slower than expected core print. Month on month comes in at expectations, weaker on the year on year also at expectations. So the only thing that came in weaker, guys, was the core year on year. I don't know if it's going to be enough to charge a break of that support, but if it does, we're looking for that drop into 11,959. Of course, it's going to be a little bit more of a critical support barrier. Unlikely to be a major market mover here, guys, with these numbers. No downward revisions or upward revisions to the previous read. The only disappointment here is the core print at 1.8. We're expecting an uptick to 1.9. So it doesn't look like we'll see this event risk charge any movement per se in some of the majors that we've been crossing. If you take a quick look at what the intraday charts are doing, here's Aussie Yen, a nice barometer of risk, continuing to hold just above resistance. I'll show you this setup in a moment. We talked about this last night, also highlighted on daily FX, but if we do break higher, really implications for a larger scale rally here in Aussie Yen. Yeah, pretty limited impact here. Dollar yen looks like it's showing a little bit more of a profound turnover, but quick recovery. Okay, so let's delve right in. We'll go over the setups from yesterday's intraday update, dollar yen, sterling dollar, and Aussie yen. And I also want to leave some time to go over some of the other dollar crosses, as well as take a quick look at the commodities before we head into tomorrow's release. As always, guys, if you're newer to the room, first of all, welcome. If not, always feel free to throw out your questions, trade setups they'd like to review, and we will be more than happy to take a look at that. All right, so dollar yen. It's a nice area to get short at, I'll tell you that. That is the trigger that I was looking for. We'll see if this actually materializes into the U.S. Open. But dollar yen yesterday, essentially we were looking at a new formation. This is a median line parallel off of the highs from the last swing from last month and the highs from this month. You can see that the upper median line parallel was holding resistance pretty well. The bearish invalidation level still remained at 120.80, and that's essentially what we just rallied into. So here is what dollar yen looks like on the daily. Okay, so that sliding parallel for the formation, again, this is off the yearly highs, continues to cap the top side for dollar yen. Also looking at 200-day moving average coming in at 120.80, further adding validation for using this as our near-term bearish invalidation level. On the intraday, looks pretty clear. So here's where we were last night. And here's where we are now. Okay, so you saw that topside level give out. Momentum failed at a test to run into the 40 level and a break back above 120.47, which was the exact weekly open, guys. Actually gave us a validation to try to press the long side. The break happened in overnight. This is an European trade, so obviously we didn't take this here, but the essential bearish invalidation level remains that 120.80 level. And as long as we stay below that, I'm not really interested in getting too aggressive on the long side. So actually, guys, if you remember yesterday when we were doing the webinar, this thing was coming right into that same support barrier, 1962, 1963. And there was actually a really nice opening range break for US trade that put the long back into focus. Initial targets at 120.15, and then again at the weekly open. So at this juncture, heading into U.S. trade, we'll look for a little bit more of conviction short triggers. Any longer-term swing trades you take should be against 120.80. And objectively, guys, aside from the fact that it's the 200-day moving average, it is just a simply weekly opening range high. So objectively speaking, as long as that barrier holds as resistance, we'll continue to look to the downside here for the greenback. Heading into tomorrow, obviously um, we'll have the webinar here at 8:30 ahead of the FOMC interest rate decision, which comes out at 2, and then the presser is when we'll get a little bit more clarity on where the Fed stands. There's been reports all over, guys, and just combing through the bank research notes and looking through various financial publications. The expectations are everywhere, okay? That's basically a 50-50 split the way I see it, for expectations that they will cut, expectations that they'll keep it on hold again. The interesting caveat is, if you guys were in the Daily FX webinar on Monday, we were talking about the possibility, and this was just my personal idea, of them coming out with some sort of unconventional interest rate hike, meaning a 10 basis point hike or 12.5 basis point hike, which would essentially maintain credibility. It would allow them to, stick to their guns in the fact that they said they were going to see interest rate hikes this year. At the same time, the market absorbing a 0.1 or a 0.12 basis point hike in rates should be rather limited. If the data is really that good, it would be a good way for them to test the waters without pre-committing to a full-on, liftoff on rates. That being said, guys, that's just a possible scenario, probably not the probable scenario. It's very difficult for us to see them really justifying moving higher on rates amid the current environment that we're in. That being said, the risk for the dollar is going to be really paramount, and the dollar obviously has been reacting really well to the levels that we've been following. The bearish invalidation level remains up at the monthly open. That's 12,028. Also converges with that upper median line parallel over the next few days. And, as long as this resistance level stays in play, any rallies towards that should really be used or should be seen as selling opportunities. That's really what would shift the broader focus here for the dollar index. Near-term support, earlier in the week, we were looking for that confluence region just into the 50, but ahead of that now, you have that median line to deal with off the May lows, and that comes in just ahead of that 50%, 11,960 or so. So for the dollar index, for those of us, even if you're stateside and can't trade this, guys, a really good way to be able to gauge base dollar movements at its inception, equally weighted index for the euro, Aussie, sterling, and yen. Mark saying, been noticing that if a pair walks a trend line like that, most of the time it breaks it. Mark, are you talking about the dollar yen? He says, yeah. So a lot of the times, well, let me take a step back, Mark. I'm going to show you the flip side of what you're saying here. A lot of times when you do see this, especially on a rally like this, when you don't get any kickback and the market essentially rides that line, as you're calling it, it does suggest that there is a lot of upward thrust, right? The momentum is really there, that traders are really trying to push this. Also, on every pullback, you saw a quick snap to the upside. These are very indicative of a price level that wants to break higher. I'll show you the other side of that, Mark, and it's right here on the British pound last night. A lot of people call this a dead cat bounce, and you'd expect something like this to actually just break to the lows. Now, it doesn't help, or it did help, rather, excuse me, that we did get some positive UK data in overnight as far as the employment numbers came into play. Here's what those look like. In overnight trade, you saw the claimant count come in at 2.3% as expected, but the change in claims up 1.2 thousand. Average weekly earnings is really what the highlight was here, 2.9%. So one of the main things that you've been seeing the Bank of England and all these central banks essentially, guys, looking for is trying to stoke inflation. And one of the main factors of the inflationary gauge they're looking to really target is wage increases, right? Because that increases aggregate consumption, and that should spur for economic growth. So a really strong number here. The average weekly earnings went up 2.9%. We also saw an upward revision to the previous month from 2.4 to 2.9. The ILO unemployment rate saw an unexpected drop from 5.6 to 5.5. That's a 3-month rolling average. So obviously the numbers coming out pretty strong. And you saw obviously a nice pop here in the British pound. That being said, here's an example, Mark, where this thing just sort of sat on that support. This is a basic 786 retracement. confluence of the 1618, and we also noted this in yesterday's report as the lower median line parallel. Okay, here's what we looked like yesterday. So obviously that support level held. This was the bullish invalidation level, if you guys remember. I'm going to take you to the daily chart in a moment, but if this level had broken, really there's nothing on tap until 5280. Okay, you saw a nice long trigger give out on the momentum trade, and obviously first target was 54, secondary target coming right on play here, and that's right into the weekly high, which also consists of that 618 that we rebounded off of last week, 154.60, 154.61. So the daily chart really highlights this key region of resistance. Remember, the objective trade here is we're still trying to get up into that 55.67 level, and this is really, I mean, I can't really stress this enough. Some really nice symmetry here with a sliding parallel for the current formation we've been in. You have a key 618 retracement for that spill down from the August high. So, you know, this was a real critical hold. And here we are right back at resistance. So a topside break from here, you're looking for the 100-day moving average, 55.16. Okay. And you're looking for that key resistance into 55.50, 55.60. And at this point, I think we would start to look for more aggressive short exposure. For the sterling intraday moving into the U.S. trade session, what's going on from here, Mike? Good story, but where do we go from here, right? So at the end of the day, this is what I'm going to treat this guy. I'm going to treat the near-term bullish invalidation level as 154. I'm going to bring it up to that former median line parallel off the highs. And again, you know, I'm really not interested in playing short exposure until or unless we break that 53.45 level. So I'm more inclined to buy pullbacks while above 54, targeting, again, 54.50, the 55.15 level, and key resistance up into 55.60. Mark says, I got the long at 54, then shorted. Shouldn't have done that. So you got the long into 54. Yeah, there wasn't really much of a short trigger there, Mark. So make sure that we're watching momentum on the near term. Here's what the sterling looks like, by the way. And one thing that we'll always, you know, note, and it's always important to keep in mind, guys, that as long as a trade is an overbought condition, you know, these misconceptions that something is overbought so you need to sell it, throw that crap out the window. Okay, that doesn't do anything. Doesn't serve anyone well. That's just for, you know, people who want to teach FX classes or or technical analysis classes. The truth of the matter is, when a RSI signature, specifically on the near term, guys, breaks into overbought territory, that means the market's got so much oomph, so much push behind it that the oscillator or the signature was able to break into this territory. That's not when I want to start fighting it, right? And we'll also talk about the fact that an RSI signature can stay in overbought territory for an indefinite time period. It can stay there for a month, a week, a year, a decade. Nothing says it has to come back, but it's the act of coming back from oversold that really would give me the conviction to get back on the short side. On the intraday mark, for me, even on a break sub 70, which can be used as a trigger in and of itself, the only trigger that you might have jumped on here was there. Even on a trade like that, you know, the 60 break or the subsequent hold here would have been to tell, hey, you know, something else is up. And just for your purposes, Mark, here on that scalp, I really wouldn't have been so much against it. In fact, a tight stop against the highs after that trigger would have probably been something I would have tried to play. And you know what? A quick stop of a 10, 5, 8 pip stop against the highs here, no harm, no foul. But broader trade on the back of good data, on the back of the fact that we're expecting dollar weakness, you know, I wouldn't necessarily want to try to fight that rally. Mark, does that make sense? Does that help a little? He says, yes, thanks for the explanation, and more than welcome, man. Always great to see you in the room. Gary says, hi, new to your service. What would today's profit target for dollar yen be? Gary, great. Welcome aboard. Good to see you in the room. So to go back to dollar yen real quick, I wouldn't necessarily know what you mean by target, Gary. So this webinar, we talk about the intraday strategies on trades that we're looking to take within the course of a session or 2 sessions. For me, I'm still looking for the U.S. opening range to give me a short trigger to take ideally against 120.80. But the one caveat we always need to remember that when we're scalping, we're looking for predefined profit targets. Typically, a quarter of the daily ATR is what we're looking for. It's critical that the stop be able to be placed 29 pips away at a valid technical level. Meaning, I'm not going to just take a trigger, put my stop at 29 pips, and go have coffee, right? That 29 pips needs to represent either a major high, a technical threshold, a major trendline resistance or support. There needs to be something that 29 pip radius or the 29 pip range takes me into. So downside targets from here, to answer your question bluntly, Gary, if we do find some short exposure, some short triggers heading into US, downside exposure from here, you're looking for 120.15 and you're looking for 119.60. Same levels we played on the short yesterday. And in fact, if you guys remember, early in the week, we played the long. Initial target we took out at 120.50, and then we took out the rest here at 120.47. It's the same targets. Nothing's changed. Nothing's changed. Bearish invalidation 120.80. Now, Gary, if we break through 120.80, that switches the bias, or that switches the mentality, where we'd be looking to buy pullbacks. And that would give you a target into 121.37, and then 121.73, 121.90. This is a critical area of resistance for the dollar yen. So the market's lined up on both sides. At the end of the day, if we take this in a super, just completely objective mode, guys, you are in one hell of a consolidation. And this can be seen across pairs, not just in the dollar yen. So even on the upswing now, coming towards resistance, looking lower against that 100-day moving average. Questions on dollar yen? Gary, I hope that offers some clarity on that. And again, welcome to the room, man. He says, okay, many thanks. Cool. Cheers, mate. All right. So Dale got a question on sterling dollar. Seems to be a couple questions on the pound. So I'm going to go back to that one. If there are no other questions on the dollar yen, let's go back to the pound real quick. Dale says, I was in sterling dollar long at 153.49, but chickened out before the UK data and took it off. LOL, that hurt. Dale, I've been in those shoes before, my man. Look, prudence pays sometimes. Sometimes it's missed opportunities, but very rarely. Let me take a step back. If you're in a scalp, guys, or you're in the intraday position and you do have major event risk coming out. Now, this is aside from tomorrow's FOMC, which is by far, guys, going to be the most important central bank interest rate decision this year. So I want to caution everyone who's using this strategy, everyone who's trading near term, tomorrow is a day where you expect to see massive swings in volatility, and you want to just use some prudence. So if you're trading X leverage, trade a multiple of that or a portion of that rather. And you don't really want to stick with pairs that have too tight in ATR, because if you have your stops really tight on an interest rate decision like this, where every comment that comes out of Yellen's mouth is essentially going to cause some sort of gyration, you want to work with a little bit more of a comfortable stop. But when we're coming into an interest rate decision, Dale, to put things bluntly again, the best thing that you can do is, if you're concerned about the decision, is reduce the position size. And then for me, I'll push the stop out to an acceptable level and let it play out, man. Especially with the UK data, you're at support. Like I said, guys, we're expecting dollar weakness. We've been looking to play the short side of the dollar. Although the Asia Pac opening range actually broke to the upside. When I woke up this morning, I looked at this spill and I immediately thought of you guys, because I thought, wow, this probably faked out some people on the spill to the downside. You checked the opening range low for Asia, that held, and then you ran right through the highs. So looking at this again from a 5-minute perspective, here's the Tokyo opening range in blue. So Tokyo opened as a near-term way to ascertain directional bias, guys. We like to use the session opening ranges. So the first hour, hour and a half, 2 hours of a market session, you'll tend to see a high put in, a low put in. We'll test one of those highs and lows. Then a break of that range gives us a near-term bias. So looking at the Sydney Tokyo Open, you had a real clean opening range at support. So this, to me, looked like a break of the opening range high right before we kind of called it quits here in New York, right? You quickly fizzled out. You checked the opening range low, which broke by a couple pips. Then this thing just completely reversed and went through the highs. Long story short, when you're heading into an event risk, you know, sometimes if you're not into a position, it might be prudent not to enter one. But Dale, if you're in a position, you have a nice entry, you have a great stop, which you definitely had there at 53.40. Might have been worth it for us to take that risk. So hindsight's always 20/20, Dale, but beautiful entry, man. It was a nice entry on that one. Cameron saying, can we take a short position on dollar yen at current levels? So Cameron, I'm going to avoid taking questions like that just on the account of, look, you're not in the session yet. The opening ranges are a crucial part of my personal trading strategy. We have taken trades here in the webinar before if the trigger gave out. Unfortunately, that trigger just gave out on the data that just prints, so I'm not going to go chasing this just yet. I can tell you that I will be looking for short triggers here in dollar yen for sure heading into the US Open. Let's see if there's anything here. Pretty tight stop, about 15 pip stop. You're looking for about 30 pips, but not much of a support trigger or a trigger to put you into a trade here on the near term. Maybe that might offer something. What is the app that you're using for the economic data? So the economic data that you see here is not actually an app, Michael. This is actually the Bloomberg terminal. So for the retail trader, not really. It's kind of overdoing it. You don't really need it, but you can see the economic docket for the upcoming events right here on SB Trade Desk. The economic docket will tell you what the next 10 events are. Or B, you can also see it on Daily FX. Daily FX will have a whole page that's just the economic data prints. Dan saying, nothing wrong with taking profit off before news events. Trades are endless. Funds are not. Dan, good point. Dale says, good advice. Thanks. I got nervous because I didn't see anything around that 52.20 level. 52.20? You're talking about 50. I think you might have the wrong level there. 53.30, Dale, I think is what you mean. That was a major key support there. He says, yes, sorry. No worries, man. No worries. Okay. Going through your questions here. I do see a lot of questions hitting the mark, guys. I just want to go through the last setup, and then we'll jump into all your setups here. I just want to kind of try to keep the room tidy. So that was sterling. Still liking the long side. We're into major resistance. Look for a pullback into U.S. trade. Ideally, you get some sort of pull near 54, and you look for long triggers down there. But watch that weekly opening range high, 618 retracement at 54.60. All right, last but not least, Mark saying, I hate the sterling so much, I keep playing it. That ended today, LOL. It's known as a professionally traded market, Mark. I don't blame you. It chops up a lot of retail traders, I'll tell you that much. But listen, when the formation's there, if it's clean, it's clean. Graham saying, sterling, 5-minute trigger, divergence against resistance. It's not the cleanest trigger break. But yes, divergence against resistance, absolutely. 54.60, you're at 54.46, about 25 pips on the stop. Okay, let the range set. Let the range set. I think you get another push higher here, and then actually we may take a short on this one for the sterling. Again, on a trade like this, and it's so important you guys keep this in mind. We talk about it all the time when you're playing counter trend on the daily session. Half leverage automatically, because I don't want to, I'm fighting the trend. The daily trend is obviously to the upside. I don't think anyone's going to look at this and say this is bearish, right? But you are at resistance. You are at the weekly highs. Might be worth a short scalp. Might not get the full 30 pips out of it, but you want to play a little bit lighter on the way down when you're trying to fight this major trend here. Still liking the sterling to the upside, so keep that in mind. I'm going to watch this one here on the side. It might be a nice entry there, Graham. It is early in the session, but it might be a good entry. So let's just get through the last scalp chart from last night, and that was Aussie Yen. I published a piece on this on Daily FX as well. The major premise here, guys, is very simple. 86.27 to 86.13 is such a critical range. It's the monthly open. It's a broader 1618 extension off the highs, and it's also a retracement that dates all the way back, if I'm not mistaken, 38.2 that dates back to the lows from 2008, so the financial crisis, okay? And a 38.2 comes in at 86.12. You got the 2013 swing low. You got the 618 extension off the highs, and they all come in right there at 86.27, 86.13. So the premise of the trade is, look, you're coming into major resistance. This thing is obviously in a ridiculously strong downtrend, but you have a couple things to look at. There's a pending resistance trigger we've been watching for a couple of months now. So if that top side breaks with a close today and we surmount 86.27, you'd be looking for a broader rally towards 87.13, and that's that swing high that you made late last month. And also confluences or coincides with that upper median line parallel for the current formation off of the June highs. So really clear levels here, a really good barometer for risk on the Aussie Yen. So if we continue to see that, markets continue to remain buoyant, let's say ahead of the Fed tomorrow, we'll look for that topside break. Here's what it looks like on the intraday chart. As a disclaimer, guys, I haven't taken any positions on Aussie Yen just yet. At its face value, it is a simple weekly opening range, and we're just looking for the break. That's not a conviction break for me, okay? And in fact, we haven't really gotten too many candle closes above it. Momentum on that last rally is showing divergence. Price action making a higher high, the oscillator making a lower high. But again, when these divergence signals are above 70 or below 30 on the extremes there, not too much conviction on them. So a little bit weary of the Aussie Yen, but the levels continue to pan out really well. The topside resistance barrier here at 86.73. That's also that sliding parallel that you see there in orange. And then obviously 87.30 is going to be the major resistance target for the top side. My problem with Aussie Yen moving forward into today's session is that if you just look at relative performance, and here's what the dollar looks like so far in this session. These are performances against the dollar. You can see that the Aussie is actually up 0.34%. Yen isn't doing much of anything. A little bit off on the session, but not much. So broadly speaking, we like the dollar yen short. That's yen strength. And the Aussie is one of the strongest on the day. So it's kind of strong meets strong, right? A little bit trickier for me on the Aussie Yen. So we'll let this pan out. Broader bias remains bearish below this key region today. We'll have to see what the close looks like, but the focus is going to be on 86.30 as we open up US trade in just over half an hour. Eileen says, thanks, guys, for the great granular questions and comments. I agree about the pound. It's seductive. I, too, got caught with a lot with it. Everyone who's been trading for a while in FX, I think, has a similar comment on the sterling there, Eileen. Depeche and Cameron with a little bit more of basic questions here, so I will take a moment and go over those. But before we do, is there anything else on Aussie Yen, guys, that you have any questions on before we move off? And again, here's that sterling pushing back into those highs. Oops. So this in and of itself was a near-term trigger. This is a 1-minute chart, by the way, guys. As granular as it gets. Okay. Um, so Depeche saying, can you please explain a little more slowly how you technically determine a session opening range? So this is what I would say to you, Depeche. I would encourage you to get this add-on indicator. It's called Trade Sessions. You can find it on fxcodebase.com. And essentially what it allows you to do is just highlight the highs and lows for each session. New York, London, Tokyo, and Sydney. So the thing that you're looking at with opening ranges is that if you look at price action objectively, markets tend to put in their extremes or on their extremes in price in the extremes in time. Meaning, if you put in a Monday low, you typically expect to see a Thursday, Friday high. If you put in a Thursday or a Monday, Tuesday high, you expect to put in, a Thursday, Friday low. This same phenomenon happens in all different types of time, respective time analysis. So whether you're looking at a daily chart, which would be sort of the monthly opening ranges, or if you're looking at intraday, which for me would be the weekly opening ranges, these things can tell us something about what's happening in near-term price action. So can you apply this same rule to the session? So here's the session indicators. The session indicator is not going to highlight the opening range, but we'll be able to easily graphically identify what the high and low for each session was. So if we look, for example, just over the last couple of days here, the market will tend to put in a near-term range on the open of the market, and you look for a break of that to give you a bias. So what's a good example? Here's, well, I guess the London trade session right here. So it starts in green. Okay, this is just today's price action in the sterling. London opens. You set a high about 53.47, right? That's where you open the trade session. Within the first couple of hours of trade, you set a low at 153.30, and now you're trading within that range. You look for a break of that range. If we break the highs, we're bullish against the lows. If we break the lows, we're bearish against the highs. Okay, so the break happened a couple of hour and a half into European trade. Break of the highs, you're bullish against the low, looking for it to close the session near the highs. That's exactly what we're doing. So here's the US opening range now. Okay, I personally like to use more of the 9:30 into 10 o'clock spot, or the 9 o'clock to 10 o'clock hour. The most important thing, Depeche, that I want to impress on you is don't stress time, but more so price. So an opening range could could be formed within the first 10 minutes of the trade session, and then we could sit in that range for 3 hours. Or the opening range could take an hour to set, meaning you're just on an upslope, and you finally put in a high, and then the break will happen, 20 minutes later. All you're looking for is, what's more important than anything, guys, is always going to be price. So I'm looking for a market range heading into the open of the session, and then I'm looking for a break of that range to give me a directional bias. Now, we already have our bias set, right? This is for the immediate bias. What's the next move like over the next hour horizon? Whereas we know that in the pound, we're at support. So I'm looking for long exposure. So when I see an opening range break to the upside, well, that's in line with my bias, right? If I'm at resistance, like we are now in the pound, and I don't have a short trigger in momentum, which we don't, well, I'm going to look for the opening range to set just below this resistance. And if we break the opening range lows, that's my trigger to go ahead and jump into that position. Depeche, does that make sense? I'm sure a lot of you guys have these questions, and I hope this is helpful. It's always good to review sort of the basics here. Depeche says, nicely explained, got it. Price action, break of the previous session high low determines bias. I don't want to, one thing I'll fix in that, Depeche, not the previous session, my man, the current session. Okay, so this red line here represents the New York open for cash markets. I like to use, like I said, the 839, the sort of 8:30 to 9:30 range. Sometimes that extends into 10, but you get the picture. He says, sure. All right, cool. Eileen says, always helpful. Awesome. I appreciate the feedback, guys. There was one other question here from, I think it was Mike from last night. Cameron, could you please explain some of the basic rules on how to use RSI2 in different time frames? So again, a quick review, guys, and then we'll jump into your questions on the pairs that you're trading. So for RSI, guys, there's really nothing that is special about RSI2. The only addition that RSI2 gives you is that it auto scales the oscillator, and it also adds the 40-60 levels, which for us is a great tell. RSI, probably one of the most misused oscillators or technical indicators out there, just because the retail base has such a misconception on how to actually use it. So simple things that you'll recognize in RSI, let's go in real quick. In strong downtrends, you'll actually find resistance at the 60 level, not 70. And that's a great way to be able to ascertain broader directional bias. I'll bring an example of the dollar yen over the course of the last few years. Obviously, this is an extreme trade because it's been so constructive since the 2013 lows. But the bottom line is this: when you're looking for strong uptrends, support at 40. You want to see breaks into overbought condition. That's healthy for an uptrend. So whereas people here would start looking, oh, we're overbought, let's sell it. Hell no. For me, I'm looking to buy the dips. This thing has got plenty of momentum. And a perfect example of how a momentum signature can stay overbought for an indefinite time period. Here's over a month and a half that this pair stayed in overbought territory. On the pullback, turn ahead of 40, still bullish. On the pullback, turn ahead of 40, still bullish. Break into overbought, still bullish. This was the first break sub 40 we've seen in momentum since, well, back here in 2013. That was probably the steepest correction that we've seen since what we're getting now. Okay, so this is telling us something. Also, what happened right ahead of that 40 break? A 60 hold in resistance. In strong downtrends, I expect to see 60 hold resistance. So it suggests that there may be something happening. So a quick look at the broader momentum signature can actually tell you a great deal about what's happening in the momentum for the trade. Now, again, we do this. Mark, you're so helpful, man. Every time someone asks, Mark's got this. He's got this link ready to go. I appreciate that, Mark. So here's the link for that indicator, guys. But the point being is you can see what I'm talking about, right? 60 hold in resistance, 40 break as support. There could be something bigger happening here. So we can do this on all different time frames, even the 5-minute. Okay, here's the rally off the base from last night. 70 break. That's constructive as it gets. On the pullback, uh-oh, 40 hold. 60 break. On the pullback, still bullish, 40 hold. 60 break. On the pullback, now we're turning at 50, right? Long story short, it can tell you what the broader momentum signature is doing, aside from the fact that we also use it to offer us, triggers in near-term price action. So, Cameron, does that help on sort of the basics of how we use RSI? Obviously, when we're looking for momentum triggers or, to actually issue a trade, your best trigger is always going to be a divergent signal into a trigger break, meaning price action makes a new low, that low or high is not reflected in the oscillator, and then you get a trigger break. Those are going to be your best triggers to actually execute a trade. All right. So I hope that offers some clarity on that. He says, yes, thanks. Feel free. And again, you're in the right place, Cameron. As we go through the setups, feel free to just, say, hey, Mike, what's that? Why is that you're looking at? And we'll be more than happy to review that. So nice quick review. I'm sure everyone finds that helpful. Let's go ahead and jump into your questions. I see a lot of pairs that you guys want to look at here. So first things first, I'm going to start from the top. A lot of hate for the sterling. I saw all those messages. Hamid, good to see you, says Dollar CAD. Seems like a broken support level. Am I right? So Dollar CAD was actually highlighted on the radar charts a few days ago. And essentially, the major thing that we're looking at with the dollar CAD was this daily chart and the fact that 132.88 represented the reversal day close from August, and the broader downside or the broader risk for a spill to the downside remains. If you look at the momentum signature, thing is just completely coiling up, guys. I mean, a move like this, you'd expect to see a serious break when markets continue to coil like that. So here's what we're looking at right now. And this is why I'm still not super confident about jumping all over Hamid, the short dollar CAD. First of all, the fact that everyone's bullish is making me very confident, but from a technical standpoint, we're not quite there yet. I want to see the momentum signature dip below this on a close basis. Cameron, one thing I want to just go back about the RSI thing that we want to take note of. Something that everyone should always remember is that the RSI signature, and for that matter, any oscillator, whether it's stochastics or RSI, Bollinger Bands, even overlay indicators, the indicator or the signature line doesn't get pegged until the candle closes. So if we see a drawdown in dollar CAD down to like 131.60, this is going to look like you're making a clean break. But that line doesn't get pegged until the candle closes. So we could see a rebound in price. And although price is stretched all the way down there, if we close back up here, the oscillator will look like it never even broke. So it's important to keep that in mind. What does that mean? It means specifically for us on the near term, that's why we take a little bit more of a granular approach. We go into the 5-minute chart. We go into the 1-minute chart. Why? Because we need those triggers. We need that candle to close to validate a trigger break. So just keep that in mind as far as that's concerned. So that's one thing I'll be looking at for the dollar CAD daily. For the intraday, the levels are super clean. Who was it yesterday here in the room who was asking Mike, are you basically saying that 32.88 is what I should be selling against? It's still the bearish invalidation level. So any rallies you get close to 132.88 where you can put a stop of 28 pips against that level makes sense. You didn't really get too much of that. Really took close. I mean, this was exactly 28 pips. You know, I wouldn't have taken that trade per se. Momentum is still holding 40, 60. Saw a quick dip below 40, but a quick recovery as well. Long story short, 32.88 remains the bearish invalidation level. I'm looking lower against that region. Near-term support 31.70. And then the key support is going to be the monthly open, and that's 31.38. You see that there in purple. So no change. And I'd have to say on this one, Hamid, yeah, I'm still looking to sell the bounces. You have to really focus on the near-term price action in dollar CAD. You are getting some signals as far as triggers to the downside. Here's one I was looking at last night. Again, didn't have the guts to take it. You would have seen a quick stretch back into the highs, but with a stop against the Sydney high, you would have been all right on this move here. Excuse me, this is in London. Where was the one in the US yesterday? Here was the one in US trade. This was the one I was watching in US trade. So you got the trigger break, and he dilly-dallied there for another hour or so before he actually started to break down. But look at the momentum signature. 60 hold is resistance. 60 hold is resistance. There's nothing to say, guys, that you can't play the range. But after all, we are intraday, so why the heck not, right? But when you see a momentum signature that's 60-40, 60-40 in a trade like dollar yen, super nimble is the name of the game. All in, all out on the highs and lows, and that's how I would play it. Whereas, you know, a dollar yen trade, for example, on a trade like this, we'd have the initial entry. I'd look to take some off here, bring my stops up to break even, then maybe take the rest off at the next target. On a trade like dollar CAD, it's all in, all out. I'm not going to really look to play that because we don't have that definitive directional bias yet. We're still in that range. So Hamid, does that help on dollar CAD? I wouldn't necessarily say you broke major support, but I would say that you have made a break of the weekly opening range low. As long as you hold below 32.25, I'd be looking to sell rallies. That makes sense to me. Hamid says, thank you for your explanation. You're more than welcome, man. My pleasure. All right, so that is dollar CAD moving right along. Raj wants to look at EuroCAD, and someone else also wanted EuroCAD. So let's take a segue into this. So the EuroCAD, the only conviction I have on this trade was the resistance barrier that we ran into yesterday. Nice confluence, or I guess it was the day before, nice confluence of the median line structure off the lows for the year, and a 786 retracement from that decline off the 2014 highs. You can see a little bit of a kickback off that region. On the near term, the rally's holding at 60, holding at 60. Let's see what this looks like intraday. I actually haven't checked it out yet. EuroCAD. Would you look at that? So we actually looked at this on the Monday webinar, and I guess that target just hit yesterday, 15th, last night, and that was a 38.2 from the low that we made last week. Also a confluence with a basic lower median line parallel from the advance off the monthly lows. So just give me 1 second here. Let me just, take this on the fly. I haven't actually looked at this yet this week. All right, so I would expect actually some kickback on this trade, meaning maybe a near-term recovery. The bearish invalidation level now gets lowered to here. So as long as you stay below 149.65, 149.75, 149.65, 149.85, you look to sell rallies in EuroCAD. One thing that you want to keep in mind is that it's a larger ATR on this trade, right? The daily ATR is 238 pips. So that gives you profit targets of 58, 62 pips per scalp is good. A little bit wider of a range. So if you're newer to the strategy, again, maybe not the best pair to get involved with, but that's going to be your near-term bearish invalidation level. And again, watch the momentum signature. So off the lows, break above 60, keep looking higher, hold at 40, keep looking higher. Break above 60, keep looking higher, hold at 40, hold at 40. Here's the break. So on this rally, even if you get a snap of that trigger, look for resistance at 60 as price moves into this region. The stop at that point would be against yesterday's opening range high. Could be a decent setup. Could be a decent setup. Again, I just not a pair I've been following recently, so I hope that offers some clarity on that, Raj, as far as the EuroCAD is concerned. Now, ultimately, guys, this is a constructive trade. Okay, ultimately, I would be looking to buy the pullback. It's just on the immediate near-term bias. You got to watch that 49.65 level, and that's going to be our bearish invalidation level. All right, Raj, you're more than welcome. Moving right along, Sterling Oz for Dan. What's your thoughts on Sterling Oz? More of a swing trade. I'm short from 3 positions with an average cost of 219.84. Sterling Oz. Here's what that looks like on the daily. And your average is 219.84. Nice average. Okay, so you're looking for, it's more of a swing position. This is what I can tell you, man. I'm not sure, Dan, what your objective is on that trade, if it's sub 214.20, but this was actually a report that we put on Daily FX and on SB Trade Desk last week, in the fact that that is absolutely critical support near term. Okay, you're looking at a basic 236 retracement from the advance of the yearly range. So this takes into account the entire 2015 calendar year. You're also looking at the July swing highs, the opening range high for August, and the monthly open. All come in this range between 215.20 and 214.20. Okay, a larger range of support, but this is the largest range trade that we talked about today with over 300 pips on a daily basis. So near term, look for a possible rally back into that basic trend line support off the lows that you made there in May. That takes you maybe as high as 216. So that's my only concern as far as this trade, is that you're coming off a pretty big support, Dan, so you could see that rebound have a little bit more fervor to the upside here, especially on the back of the sterling rally that we're seeing today. Now, Aussie strength may cap that, which is what's good for you, but I would just be weary if we break back above that trend line. Here's what it looks like on the intraday. I'll show you the 5-minute chart, or the 30-minute rather. So again, this formation that we were looking at from last week off the highs, we take a sliding parallel off that. I just want to see if that catches this last stretch. Okay, so sliding parallel extending off the weekly high gives us still basic resistance on that last swing. If we break 216.70, like I said, if we break back above that trendline support, I'd probably be a little bit more concerned. Your entries are phenomenal on that, Dan, but that'd be my take on things. Also, intraday, look for that 60 hold in momentum. Let's see what the 5-minute chart looks like on Sterling Oz. This might be a nice trade. So again, patience pays, excuse me, getting all tongue twisted today. Here's that trigger on the 1 minute, pushing to the upside, testing the opening range highs here still for New York. Sterling maybe not quite ready for that short just yet. Sterling Oz looks like this. Again, very clean US opening range so far. Here's your opening range low. Make that red. Here's your opening range high. Make that green. And we'll see if that gives out heading into the US trade session. So Dan, does that help? Dan Norberg, does that help on Sterling Oz? Again, I love the entries, and your average cost there is really, really nice. Near term, you're at risk for a little bit more of a substantiated rally towards that 216.70 level, but that's sort of what would shift the broader opinion for me, at least, back to the upside on Sterling Oz. Michael wants to look at, Dan says, always a help, exclamation point. I closed some at 214, was hoping for a break and maybe a move to 208. It's possible. 208 seems, well, let me take a step back. It's the August low, so it would be objectively your next major downside target if we do clear that low at 214 today. The only thing that leaves me a little bit hairy on these trades is I hate using these extremes in price for any type of concrete measurement. So the spike high, obviously, that we made last month, was such an emotional day for markets, and the rally, was really exaggerated on a lot of these major pairs. So I tend not to put too much emphasis on that high. That being said, the correction is underway, right? And we'll have to play it step by step. Right now, you're at support. You'd need to get that break below 214. Excuse me, a break below 214, though, would put that 208 level in view, more like 208.30 by my part. But if we take a quick extension off the highs, Might give us some soft targets we may want to keep in view as well. All right. Michael wants to look at sterling yen, sterling key. Okay, so we are running low on time. Let me just run through these real quick. Sterling yen, I actually have been having a couple of. Oh, we need to talk about euro yen too. But sterling yen, we've been throwing it around on the desk, and just not a trade I'm interested in right now, Mike. A couple of people have been asking about it. It's just getting really messy, and I think it's going to be a chop fest here. And one of those trades that's similar to the problem I have with Aussie Yen at the exact moment is sterling's pretty strong. We're expecting some possible yen strength. So again, strong on strong. Which one's you're trying to play? Who's the biggest winner? Um, the daily chart here is what has me confused. So typically, when the daily chart doesn't offer clarity, I'm just off the trade. And guys, just remember, there's so many trades to look at. It's pointless for us to sit there and be stubborn and really emphasize, be one track minded. I want to trade sterling yen. I just don't see a setup here for me, at least. On the near term chart, Mike, here's what I'm looking at. It looked like it had beautiful clarity and beautiful symmetry on the way up last week. The break here didn't really give you the initial drop that you would expect. And right now, we're neither at the opening range high, nor are we at the opening range low for the week. You're kind of right back at the weekly open. So yeah, sure, if we clear 186.60, look for 87.80, look for that median line off the lows. But other than that, I really don't have a setup per se. And with a quarter of the daily ATR showing 67 pips, it's not a trade I'm necessarily willing to take a loss on. I can tell you that the immediate bias right now still looks weighted to the upside. If we look at the momentum signature since the start of the week, 60 hold and momentum, keep looking lower, 40 break. 60 hold and momentum, keep looking lower, 40 break. Here's the first 60 break that we've seen. So if we plow through the weekly opening range high, you're going to continue to favor the long side, I think, near term. And that next level takes you into 87.76 or so. Mark saying if it gets to 89.70, would be very interesting. Yeah, agreed. 89.70 or 87.70? 89.70. Well, 89.16 to 89.70, this region's absolutely huge. Yeah, it would be, Mark, it'd be very interesting if it got up there. You got the upper median line parallel, the former lower median line parallel support. You got a key 618 retracement off the highs. You got the December highs from last year. Huge region. So absolutely. You'd expect to see some more concrete pivot or breakthrough off that region. But near term, risk is for a stretch higher. Mike says, I'm long at 84.89. Nice entry. Nice entry. Beautiful, Mike. Did you take that on a break? That formation was a real nice entry. Yeah, so at this point, towards the weekly high, towards last week's high, I'd be looking to possibly take a little bit off the table, bring your stops to break even. But yeah, near-term risk is still for a climb higher here in sterling yen. The other pair that you're looking at, sterling key, that's going to be a very interesting pair over the next 48 hours because of what we're looking for tonight. So tonight we do get GDP figures out of New Zealand. The Kiwi has been certainly a very interesting story for us. If you guys recall last week, actually, Jamie, I just confirmed with him yesterday, he's still holding the long from that low stretch. The target that we talked about yesterday hit about an hour ahead or an hour after the close of U.S. trade here in New York. And that was that 63.60 barrier. Remember, we said we need a breakthrough here to really get this thing going. You saw an attempted break in Europe and it backed off, but that's still the major level that we're looking at. And again, this quick median line structure we just tacked on last week continues to guide price action with precision. All right, so I'm actually still looking for a constructive play here above 63, which is the weekly opening range low. And resistance barrier still remains. Still need to get through this barrier targeting 63.90 and that 64.20 region. My point being, though, for sterling, Mike, for sterling key, is if the Kiwi's going to make some sort of near-term play, and by the way, Cameron, with regards to the opening range question we had earlier, Kiwi dollar has the cleanest monthly opening range so far out of any of the majors. Here's the monthly open. And on all my charts, you'll see each month designated with that drop bar there. But here's the monthly open. You put a high, you test the low, you test the high, it holds, you test the low, it holds, and there's your opening range. You're looking for a break above 64 with conviction, or a break back below 63, I'd say 62.50, to give us the medium-term buys heading into the latter part of September trade. So again, just a quick example of where we're sort of waiting for the opening range break to give us some clarity here on the broader directional bias or the weekly bias here for Kiwi. But from an intraday standpoint, you're starting to make some progress within the confines of that move. So where does that put Sterling Key? Well, again, I don't really like what the monthly ranges has been doing here. So again, we've just been sort of riding that upper median line parallel as support so far this month. The near-term structure doesn't look all that much more appealing either. So I actually haven't, had this on the menu. It sort of puts in the same box as Sterling Yen rather. Although if you had to, if you put a gun to my head and say, Mike, which one are you going to trade? I'd still probably say that Sterling Yen that you're in. A little bit more of a conviction trade just because the daily is not as messy as this is. Quick way to get chopped up here and even larger of an ATR. So just keep that in mind. He says, I closed Sterling Key too early, taking 131 pips this morning. I don't blame you, man. I don't blame you. You're coming towards the weekly opening range high. Probably would have held it at least until the weekly open, which is what we're coming into now. Keep those things in sight, guys. The weekly open, the monthly opens, the yearly opens. These can be, critical points from a technical standpoint, especially in intraday trade. So I don't blame you on that. No one ever went broke booking profits, Mike. That's the way I see it. So nice move on that. All right, so we are over on time. I think I've gotten through all the pairs that you guys wanted to go over. A real quick review of Euro Yen, just because it's been something that's been on the scalp charts for the last couple of days. Still looks pretty nice. You're getting a little hairy here in the fact that you broke key support and you checked it last night as resistance and you sort of dribbled back above it, but 35.86, okay? 35.88, which is still the September open, continues to be the pivot. The break below this shifted the bias to the downside yesterday. Resistance here and a nice short trigger and overnight offered another spill for 36 pips. Here we are testing it as resistance again. So near term, if this does break, you would look for a rally towards, excuse me, sorry about that. You'd look for a rally towards that lower median line parallel resistance, and that takes you back into like 36.14, with the bias still weighted below to the downside below 36.40 in my opinion. So expect some immediate upside from here just on account of the break of that downside channel off the weekly highs. Likely to get a little bit more of a pop higher as we head into US trade. All right. Eileen says, thanks for the class. Cheers. I look forward to seeing you tomorrow unfolds. Quick housekeeping, guys. You guys should be getting all access to the IDO search offering next week. I've been trying to pinpoint a time frame with IDO. It looks like we're ready to go. Just final touches there on their side. But exciting stuff about that. Like I said, Jamie will have an educational how-to video and how we'll be looking to implement that into our strategies. But really exciting stuff. All current live subscribers, up-to-date subscribers will be getting free access to that. I will keep you updated on the homepage as far as when that release is concerned. Till then, best of luck trading, guys. Lighten up the load. Listen, tonight, expect the market to go into a holding pattern. This is classic Fed market reactions. You're not going to see any major fluctuations outside of some sort of unforeseen event. But long story short, the critical nature of this interest rate decision, not only on its impact on the dollar, but its impact on policy on global central banks, which are essentially looking to take cues from the BOE. Look, you've had the global bank, the IMF, the BOJ. Hell, even China came out and said, the Fed should hold on lifting rates. What the committee will do in face of that kind of pressure from global central banks is going to be what we'll be assessing tomorrow. We'll give you a quick update. tomorrow morning in the webinar on where the levels stand, and obviously the fireworks hit tomorrow at 2 p.m. Eastern. So till then, best of luck trading, guys. I got to go. I will see you tomorrow morning, same time. Cheers.